Hi everybody.
Hi everyone.
Today we're going to give you an update on the Massachusetts real estate market in 2023. We're going to be talking about a few key trends that characterized the real estate market last year, and those trends can really be applied to the rest of the country, but the numbers that we're going to be throwing at you are specifically for Massachusetts. If you are interested in a different part of the country or a specific city, let us know and we'll be able to put those numbers together for you. Before we dive into that, we just wanted to ask you to please like and share our videos. It helps us reach more people, and that way we can help more buyers and sellers.
So what's the first trend we're going to be covering today?
So the first trend that we're going to be covering today are the high interest rates. The Fed started its rate hikes in March of 2022. And according to Freddie Mac, the average 30-year rate got up to around 7% in November of 2022. Then it was up and down for a little bit. It went down to 6.5% the first week of 2023. Then it went up to over 7.7% at the end of October of 2023, which is when it started dipping down, and it's currently at 6.6%. These are the best rates that you would see if you are putting down a lot of money on your home purchase, usually 20% or more, and also if you have a really high credit score. And that's usually over 700. Over 760 is even better because I think it gets you into that next bracket where you get an even lower rate.
Yeah, there's a certain point where there's no return on that though.
Yeah, it's over 800, I think, which not a lot of people have that credit score. These rates are definitely high if you compare them to the last decade, but we've certainly seen higher rates in the past. So for example, in October of 1981, the mortgage rate got as high as 18.4%.
Gulp.
So things can definitely be worse, but adjusting for inflation, things are probably feeling a little bit closer to that 18.4% than the 6.6% that we're currently sitting at.
Yeah, and a lot of that's because of the affordability of a house. If you look at the price of a house compared to what your average household income was back in the early 80s, the house was costing, 4 or 5 times as much as what the house was earning. Whereas if you look at it now, you're somewhere between 8 and 10 times the average household income.
Yeah, and to drive this home, no pun intended, only around 23% of homes that are currently listed for sale are affordable to buyers making an average salary. In a normal market, that's usually around 50%. The next trend that we're going to be discussing is the historically low inventory.
In Massachusetts, as of the third quarter of 2019, there was over 12,500 single-family homes for sale at any given time. In the first quarter of 2021, that number went down to just over 3,000 homes. From that date on, it hit a low of 2,200 homes, and as of the third quarter of 2023, inventory was sitting somewhere around 4,200 homes at any given time. If you're interested in the condo numbers, we're going to put those up for you on a graph as well, so you can take a look at that.
Yeah, and as per May 2023 data, only 2.6 months worth of inventory is available. This lacking home inventory explains why a lot of buyers have to bid way over asking price to be able to get that home. And in a lot of cases in Massachusetts, we're still seeing a lot of bidding wars for that reason.
And I just want to add that's a little frustrating to a lot of my buyers because they're looking at national numbers and people are talking about prices dropping or things slowing down, but that hasn't actually happened in our market here currently.
And that's the important thing to note. If you are listening to the news, just keep in mind that usually that's going to be information for the national market. Mm-hmm. Every market is different. So if you live in Massachusetts, if you live in a specific city, you really want to look at those numbers.
Yeah.
The next trend are high home prices. The average single-family home price was around $530,000 in 2019. That went up to just over $600,000 in 2020, then up to just over $681,000 in 2021, up to almost 740,000 in 2022, and then finally up to just over 780,000 in 2023. Now, if you're a math whiz, you were probably able to do the math in your head.
I am not a math whiz. I
Me
did not do
neither.
the math in our head.
That means that the average home price in Massachusetts went up by $250,000 since 2019.
That sounds like a lot when you say it out loud.
That is a really big number.
Yeah.
So that explains why there has been an affordability crisis, not just in Massachusetts in 2023, but around the nation.
Yeah. What's the next trend you wanted to cover?
Yeah, so the next trend we're going to be focusing on is the really high credit card debt.
So your credit card debt plays a very significant role in your ability to purchase a home. If you're carrying very high debt on your credit cards, it's going to greatly affect the interest rate that you're going to have and the ability for a lender to even give you a loan. Potentially, you won't even be able to get one.
Yeah, and that's because your debt to income will be really high. So some lenders are not going to be able to give you a loan if that exceeds a certain threshold, or they will give you a loan, but you're going to get a really high interest rate.
Yeah. According to the latest consumer debt data from the Federal Reserve Bank in New York, in the third quarter of 2023, Americans' total credit card balances were just over $1.07 trillion. That's up from the previous record, the previous quarter, the second quarter of 2023, where it was $1.031 trillion. That's a $48 billion increase in just one quarter, and a $223 billion increase in credit card debt since the fourth quarter of 2021.
Ouch.
Yeah, those are obnoxiously high numbers.
They are very high numbers. If you're somebody who's considering buying a home in 2024, make sure you watch out for that. You don't want your credit card debt to be too high because, again, that debt to income ratio is going to be affected, and you might not be able to get a loan or an optimal interest rate.
One of the things I always recommend to people is when you first start considering buying a home is talk to a lender. Go over what your debt is. Let them know what your credit card balance is, how many credit cards you have, what the balance is on them, and also what the max is on them, because the maximum balance to the actual balance, all those things play a role. So talk to your lender, go over what you're looking at, and if you have an issue, they're going to be able to talk you through a few ways to fix it and put yourself in the best possible position when you're looking for a home.
Yeah, and it makes sense to do that way ahead of time. This is actually a good time to do it because most people look for homes in the spring, so you still have some time to talk to somebody, figure out where you're at as far as your credit card debt goes, and what you have to do to fix it if there is an issue.
So the next thing we're going to be talking about is vacant commercial properties. There's been a significant uptick in vacant properties on that commercial front. Most of this is due to the pandemic. If you remember what things were like before COVID, everybody went to the office, everybody worked, you sat in traffic for hours sometimes, and then you'd come home and pretend to have a life. Once COVID hit, a lot of the companies, just to keep afloat, they started doing work from home, and a lot of them continued that after everybody started being able to go back, so they don't need as much office space as they used to. So you're seeing companies having a need of like 20 or 30 or 40% less space than they had. So a lot of them have been shrinking their office space. They're actually not renewing their leases or breaking the leases that they were in or getting out of them. So this is really putting a lot of strain on the banks because most of these companies are carrying debt on the properties. They don't own the buildings outright. They need that income, so they take out corporate loans. When they took them out, interest rates were really low. Now all of a sudden interest rates have come back up. And corporate loans are typically adjustable rate loans. So now those monthly payments are significantly higher and their properties are 20%, 30%, or even 40% vacant, and they're having a hard time making those payments.
And that might actually lead to a bank crisis because a lot of the entities that own commercial real estate are going to be unable to pay the note, which means that the banks are going to be left holding the bag.
So they're going to end up foreclosing on those properties, and they don't want to keep those properties. They're going to try and relist those properties, but there's going to be less demand for them. It could get a little messy as far as commercial real estate is concerned in 2024 and 2025.
Yeah, it'll be an interesting trend to look at just to see what's going on with that. Those were the main key points that we wanted to discuss today. In summary, because of the low inventory, home prices have gone up in spite of the high interest rates, which would usually lower demand. That basically, in a nutshell, explains what happened in the real estate market in 2023 nationwide. Again, the numbers that we gave you are specifically for Massachusetts. If you would like to see numbers for different parts of the country, just let us know. And the next video that we're going to do are going to be our 2024 real estate market predictions. So look out for that, and we'll see you in the next video.
Looking forward to seeing you all next time.
Bye, everybody.
Bye, everyone.